So under depreciation until now, we are done learning about quite a lot of things. We have learned all our three conditions. We've learned about the WDV method. Then we have learned about the block method. We've learned about the actual cost. We've learned all our special scenarios one after the other. And then we've also learned about sale of asset. Now coming to the next adjustment under depreciation, the seventh adjustment we are still under the depreciation adjustment. So under the depreciation adjustment, our next concept is going to be about additional depreciation. Now, this is one of the most important concepts inside the depreciation adjustment. So we will do this as well as we can, in as much depth as we can, taking a few points from CA final as well, so that we get a 360-degree understanding of this entire concept. We are going to understand this concept not only theoretically, but also practically. From the practical point of view, also I'll be giving you some points over here, because this is one thing which is very, very beneficial for the SSE. So even from your practical articleship perspective, you should be knowing some points which you should be able to apply when you start actually doing things practically. Okay, so listen carefully and understand this not only from the examination point of view, but also from the practical point of view. Listen, additional depreciation is one of the big benefits that we give our assessee if he is into manufacturing. All right, additional depreciation. What does the word additional indicate to you? That you're going to get this in addition to your usual depreciation. You're anyways getting normal depreciation. Over and above that, in addition to that, you're going to get something more. You're going to get another depreciation, an additional depreciation, and it is also called as accelerated depreciation. So additional depreciation, accelerated depreciation, it all means the same thing, just that I'm giving you a little extra depreciation. See, any extra depreciation is going to be beneficial for the assessee, guys, because in reality, no money is going out. In reality, it is not a cash expense. No money is going out. But still, I'm letting you debit this to your P&L. And more the depreciation I let you debit to your P&L, more the expense I let you debit to your P&L, lesser will be your net profit, and lesser the net profit, lesser the tax. And that's exactly what your assessee wants. Right, guys? So if you want to enjoy this benefit of additional depreciation, which is also called as accelerated depreciation, if you want to avail this benefit, then you have to fulfill multiple conditions. What are these conditions? Let me explain to you one after the other. Listen, condition number one, the assessee should be into some specific businesses. Either he should be into the manufacturing business. And when I say manufacturing of anything, manufacturing business, either he should be in the manufacturing of goods, or he should be in the business of generation or transmission or distribution of power, which means electricity business, generation, distribution, or transmission of power. And there is also a circular which says that manufacturing will also include printing books. Even printing of books will be covered, and printing and publishing of books will also be covered. But majorly, assessee should either be into manufacturing, or assessee should be in the business of generation, transmission, distribution of power. Manufacturing will also include printing of books, printing and publishing books. First condition. Second condition, this assessee must be following the WDV method of depreciation and not the SLM method. Condition number 3, the asset should be plant and machinery and not furniture, not building, not intangibles. Condition number 4, this asset, okay, it should be plant and machinery, but it should not be the ineligible assets. What are the ineligible assets? Like, for example, it should not be ships. It should not be aircrafts. It should not be road transport vehicles. It should not be a ship. It should not be an aircraft. It should not be road transport vehicles. It should also not be a second-hand plant and machinery. It should also not be a plant and machinery which is already installed in the office premises or in the guest house or in residential houses and all. And finally, it should not be a plant and machinery for which you have already availed 100% deduction. Most of this you wouldn't have understood. Listen to me, be patient. By the end of it, we will understand it all. What are we learning about? Additional depreciation. I am giving you a slightly extra benefit. I'm giving you a slightly more depreciation. I'm letting you avail a larger depreciation number, which means I'm definitely giving my assessee a big benefit. Higher the depreciation, higher the non-cash expense, lesser the net profit, lesser the tax, and that's exactly what the assessee wants. But if the assessee wants to avail this benefit, then the assessee has to fulfill 4 conditions, and out of these 4 conditions, all the 4 conditions have to be fulfilled. Now, what are these 4 conditions? Condition number 1, the assessee should be either manufacturing goods, or the assessee should be in the business of generation or distribution or transmission of power. Either manufacturing business or generation or transmission or distribution of power. If the assessee is into manufacturing business, he should be manufacturing will also include printing of books and printing and publishing of books. Second condition, he must be following the WDV method of depreciation. Third condition, I am going to give this benefit only to plant and machinery category and not to any other category. And even inside plant and machinery, I have some exclusions. Ships, no additional depreciation. Aircraft, no additional depreciation. Understood. Let us talk about road transport vehicles. Now, what do you mean by road transport vehicles? As the very name suggests, they are vehicles which are used for road transportation. Like, for example, if your assessee buys a car or if your assessee buys a truck, on these kind of vehicles, you will not get additional depreciation. But however, in the old syllabus, they had asked a question. And from that question, I'm going to straight away discuss the concept involved in the question with you. Listen, the question was something like this. My assessee has a factory. In this factory, let us say, over here in the corner of the factory, over here, the main manufacturing work is happening over here in this factory. It's a huge factory spread across acres and acres of land, but the manufacturing is happening in this corner. My assessee has a warehouse in this corner. This is where all the raw materials and all are kept. So every day, a lot of raw material has to be taken from the warehouse to this spot where the actual manufacturing work is happening. Now, we can't employ laborers and workers just for this transportation of raw material. So what we have done instead is my assessee has purchased a truck. So this truck is not used for anything else. This truck is used only for one purpose, and that is to move the raw material from this warehouse to this manufacturing spot. Just for the transportation of the raw material from here to here, he is using the truck. Okay, the question is, on this truck, will you let the assessee claim additional depreciation? What do you think? Yes or no? Think and tell me. You understood the question. It's a truck. It's a vehicle. But this vehicle is being used only within the factory, only to do the movement of raw material from the warehouse to the manufacturing point. It is a truck. It is a vehicle. But this truck is not being used for road transportation. It is not a road transport vehicle. Therefore, on this truck, I can claim additional depreciation. Are you understanding? I am using this truck within my factory. I am not using this truck for road transportation outside my factory. I am using it for transportation only within my factory. Therefore, I am not using it for road transportation. Therefore, on this truck, I can claim additional depreciation. Are you clear with this? Yes, guys, truck used very good point, a very, very good point. Just be careful if it's a vehicle, but if the vehicle is being used within the factory, it's not road transportation vehicle anymore. So therefore, on this, you can claim additional depreciation. Generally, on road transport vehicles, you can't. But over here, these kind of vehicles, which are used only within the factory, you can claim additional depreciation. Okay, then listen, let us talk about second-hand plant and machinery. When you talk about second-hand plant and machinery, it doesn't matter. It may be Indian second-hand plant and machinery. It may be imported second-hand plant and machinery. It doesn't matter. Indian second-hand plant and machinery means I am also living in India, you are also living in India. I was using some plant and machinery. I used it for some time. Then I sold the plant and machinery to you. Now you are using the plant and machinery. It is second-hand plant and machinery. Both of us used it in India. Doesn't matter. It is second-hand. Similarly, imported. Imported second-hand means what? You bought a second-hand plant and machinery, but the first buyer was using this plant and machinery outside India. So you imported the second-hand plant and machinery into India. It doesn't matter. Second-hand is second-hand. Whether it is Indian second-hand, whether it is imported second-hand, it is second-hand. And because it is second-hand, no additional depreciation at all. You might wonder, why are we complicating? Why are we even talking about imported then? If second-hand is second-hand, why are we trying to differentiate? The reason is there is actually another section which you will be learning a little later, section 35 AD. Under section 35 AD, there is a difference. Indian second-hand different tax treatment, imported second-hand different tax treatment. That is the reason why I am differentiating for you here also, so that when I take you to section 35 AD, I can give you a comparative analysis between this second-hand discussion and the second-hand discussion under 35 AD. So I wanted to give you that comparison a little later. So now itself I'm telling you that for additional depreciation, whether it is Indian second-hand, whether it is imported second-hand, it will not make a difference. For additional depreciation, second-hand is second-hand, whether imported second-hand, whether Indian second-hand, both are not eligible for additional depreciation. Okay, then my next condition is that the plant and machinery should not be used in office, guest house, residential houses. In other words, the plant and machinery should be used in the factory. It should be used in the place where the manufacturing work is happening. If it is going to be used in the corporate office, see, listen, air conditioner being used in the factory to keep the temperature at a certain level, that AC, you will get additional depreciation. Same additional depreciation I took from there and I put in my corporate office, I will not get additional depreciation. So you will get additional depreciation only if that plant and machinery is being used in the place where the manufacturing work is happening. That is, the plant and machinery should be used in the factory. Then you get additional depreciation. But if it is being used in the office, in the guest house, or in the residential houses and all, then you do not get additional depreciation on those assets. Understanding. And lastly, plant and machinery on which you have already claimed 100% deduction. What does this mean? Once I finish the depreciation discussion for you, I will be discussing with you about section 35. I will be discussing with you about section 35 AD. In these sections, your capital expense itself, I am letting you debit. See, tell me, generally, will I let you debit your plant and machinery, guys? Generally. You bought a plant and machinery, will I let you debit the plant and machinery itself? No, right? Generally, only depreciation I will let you debit. I will not let you debit the whole capital expense itself. But in these two sections, if some conditions and all are fulfilled, then the whole asset itself, the whole capital expense itself, I will let you debit. I will let you debit the whole capital expense itself. So which means in these two sections, when you're debiting the whole capital expense itself, you purchase the plant and machinery for 1 lakh, you're debiting the whole 1 lakh. So don't you think it's as if full 100% of the plant and machinery you're already debiting? You purchased it for 1 lakh, you're debiting it in your P&L, you're taking 1 lakh debit. So you've already debited 100%. Now what more deduction do you want? So if you're already deducting 100%, if you're already debiting 100%, then don't come and ask for additional depreciation. No additional depreciation because come on, full 100% itself I've let you debit. Now there will be no question left of additional depreciation. Okay, so if the whole asset, if the whole capex itself is debited, that is already you have taken 100% deduction on that same asset and all, I will not give you additional depreciation. Okay guys, so we have totally 4 conditions. Condition number 1, assessee should be into manufacturing business, which will also include printing books and printing and publishing books, or assessee should be in the business of generation, transmission, distribution of power, either generation or transmission or distribution of power. Condition 1. Condition number 2, WDV method he must be following. Condition number 3, eligible asset is only plant and machinery, no building, no furniture, no intangibles and all. Condition number 4, the asset should be plant and machinery, and that plant and machinery should not be ships, should not be aircraft, should not be road transport vehicle, should not be second-hand plant and machinery, should not be plant and machinery which is used in office, guest house, residential house, should not be plant and machinery on which already 100% deduction you have availed. Road transport vehicle, a very interesting point we discussed. If the vehicle is being used inside the factory only, then you can't call it a road transport vehicle anymore. So you can claim additional depreciation. Second-hand plant and machinery we discussed, whether it is Indian second-hand, whether it is imported second-hand, doesn't matter. Second-hand is second-hand, no additional depreciation. Third interesting point we discussed, if I am already letting you deduct the whole 1 lakh, if I am letting you debit, if I'm letting you debit the whole capex itself, then you can't come and ask me depreciation also then. So if you're already debiting the whole 100%, then no depreciation, no additional depreciation, no normal depreciation, no depreciation at all. Okay guys, so if all these conditions are fulfilled, then you will enjoy additional depreciation. But how much? What will be the percentage of additional depreciation? You will get additional depreciation of 20%. You will get an additional depreciation of 20%. Alright, over and above your normal depreciation on plant and machinery, you will get an extra depreciation. You will get an additional depreciation of 20%. Till here understood properly. You will get an additional depreciation of 20%, but this 20% is a one-time benefit only, which means unlike normal depreciation, which you will get year after year after year, this additional depreciation you will get only once. You will get only 20% once. That's it. You will get only once 20%. You will not get this year after year. It's only a one-time benefit. I will give you 20% additional depreciation once. Okay, but listen, even over here, we have the same concept. We will check when did you put the asset to use. Same thing we will check. Did you put the asset to use in the year of acquisition itself, or did you put the asset to use in some subsequent year? If you put the asset to use in the year of acquisition itself, 3 possibilities. You used it for at least 180 days. You put it to use for less than 180 days. You did not use it at all. If you put it to use for at least 180 days, I will give you 20% additional depreciation. If you put it to use for less than 180 days, see, I'll give you only half. I'll give you only 10%. But don't worry, the balance 10% I will give you in the next year. So even over here, totally I'll give you 20%, but 10% in this year, balance 10% in the next year, because less than 180 days, half year depreciation, you know. If you did not use it at all in the year of acquisition, if you did not use it at all, then no additional depreciation, because only when you put it to use, I give you depreciation. Subsequent year, if you've put the asset to use, even for 1 day, if you put the asset to use, I will give you full 20% additional depreciation. But in case you did not put it to use at all, then again, forget about additional depreciation. Whenever you put the asset to use, see, you may put the asset to use in the year of acquisition itself. In that year itself, you may have put the asset to use, or you may be putting the asset to use in subsequent years. If you're putting the asset to use for the first time in the year of acquisition itself, there I will bother about the 180 days criteria. And did you put the asset to use for at least 180 days? If yes, I will give you full 20% additional depreciation now itself. But if you put the asset to use for less than 180 days, then see, I'll give you only 10% now. Balance 10% I will give you in the next year. But if you did not even use this asset in the year of acquisition, then I will not give you any additional depreciation at all. Then we discussed that if you in the year of acquisition you did not put it to use, if you put it to use for the first time only in the subsequent year, then whenever you put it to use, that year only you will get depreciation, additional depreciation also. So you're putting it to use in the subsequent year. Subsequent year, you know very well, we never check the 180 days criteria. Subsequent year, you put it to use even for 1 day, I will give you full 20% additional depreciation. Same thing we had discussed even earlier for normal depreciation, guys. Exactly the same thing even over here. Subsequent year, if you're putting the asset to use for the first time in the subsequent year, then subsequent year you put it to use even for one day, I give you full 20% now itself. But remember, this 20% is a one-time benefit. You will not get this every year. See, every time you purchase a new plant and machinery, every time you put to use a new plant and machinery, I'll give you. But for one plant and machinery, you will not get every year. I purchased a plant and machinery. See, let us say I purchased this plant and machinery. So because I purchased this plant and machinery, you will give me 20% once. If I put it to use in the year of acquisition itself, you will check 180 days. On that basis, either you'll give me 20% now or 10% now, 10% next year. But if I put it to use in the next year, in the subsequent year, whenever I put it to use, that year you'll give me full 20%. But once you give me 20% on this plant and machinery, again and again you will not give me. You'll give me only once. You gave me 20%, story over. Later I purchased one more plant and machinery. So this plant and machinery, again you will give me another 20%. You're understanding? So every time I get a new plant and machinery, you will give me 20% additional depreciation. But for one plant and machinery, only once you will give me 20% for the same plant and machinery, not every year. Every year you will not give me 20%. Is this crystal clear? Yes, so this is our entire concept relating to additional depreciation. We're going to work out a very good question on additional depreciation, purely focusing on additional depreciation, that will give us 100% conceptual clarity. This discussion itself, you must be feeling very confident, I'm sure. The question will just add to the confidence. 4 conditions, guys. Assessee should be a manufacturer or generation, distribution, transmission of power, WDV method, plant and machinery, and the plant and machinery should not be ineligible plant and machinery. Okay, come on, let's work out a question. Let us do all of this application in the question. I'm bringing the question to your screens, question number 8, guys. This one. This question over here. Let's read the question. Let's understand it first and then we'll work it out. Listen. An existing industrial undertaking. What does industrial undertaking indicate? This itself indicates assessee is a manufacturer. Okay, an existing industrial undertaking has acquired the following assets during the year. Acquired. So all of these are new assets which we have purchased during the year. They have given us the date of acquisition, the date when it was put to use, and they have given us the cost of acquisition. Then what else? They're asking us to compute depreciation allowable for assessment year 23-24 and WDV on 1st April 2023, assuming WDV of block of factory building and 15% plant and machinery was 10 lakhs and 6 lakhs respectively. What is this 10 lakhs number? What is this 6 lakhs number? They have given us the opening WDV number. Yes, you are right. Opening WDV of the building block is 10 lakhs and opening WDV of the plant and machinery, 15% plant and machinery block is 6 lakhs. So they've given us two opening WDV numbers. Opening WDV of the building block is 10 lakhs and opening WDV of the plant and machinery block is 6 lakhs. Okay, just depreciation calculation, nothing else, guys. Our usual block format we will follow and we will do the computation. One good thing in this question, there is no sale. So money is payable and all, you will not have. You only have new assets which are purchased. Pure depreciation conceptual understanding. Okay, come on, let's begin. Answer to question number 8. Keep writing along with me. For sure, 100% you will understand. Do not worry. We'll take the assets block by block. First of all, we have the building block. Building, it's factory building. So category building, okay, but what will be the depreciation rate? Factory building, depreciation rate will be 10%. Very good. When is it 5%? If it is residential building, then 5%. Otherwise, it is 10%. Here it's factory building, therefore 10%. So write down block 1. What's the category of assets? Building. What's the depreciation rate? 10%. So you know very well, all assets which fall under the same category and also have the same depreciation rate, I'll block them together into one single block. So under this, your usual steps, guys. First of all, opening WDV on 1st April 2022. What is our opening WDV on 1st April 2022 of the building block? We have 10 lakhs. Then what do you add? Add actual cost of assets acquired. Have we acquired any building during the year? Yes, we have acquired factory building on 4th April 2022. That means we have acquired it in previous year 22-23. In same year of acquisition, in the same year itself, we have put it to use. So do you agree we have put it to use for at least 180 days, guys? Therefore, I will get full year's depreciation. Understanding? Yes, I acquired this asset on 4th April 2022. In the same year itself, I put it to use. So because I put it to use in the same year, you will think about the 180 days criteria. You know that if I put it to use in subsequent year, you don't think about the 180 days criteria. I acquired it on 4th April 2022. Same year I put it to use. I put it to use on 1st September 2022, which will definitely be at least 180 days. So therefore, I will get full year's depreciation. So I have acquired a building for 50 lakhs. I have acquired. I have also made you write a rule that whenever you acquire an asset, you always think about two things. Tell me, did we put the asset to use for at least 180 days? Yes. And what's the second thing I asked you to think about? Additional depreciation. Here, tell me, will we have additional depreciation? It's building. Building, no additional depreciation. Additional depreciation only for plant and machinery. Condition 1, manufacturer, fulfilled. Condition 2, WDV method, fulfilled. But condition 3 should be plant and machinery and not any other category. That condition is not fulfilled. So no additional depreciation, less monies payable for assets sold. Have we sold any asset during the year? Not really. So 60 lakhs as it is will become our closing WDV for the next year. Now tell me, should I split this into less than 180 days balance and all? No, guys, it's at least 180 days. So straight away we will calculate depreciation. So less normal depreciation, 60 lakhs into 10% depreciation rate, guys. That's going to be 6 lakhs. Always show the calculation. Net number 54 lakhs. This will become your opening WDV on 1st of April 2023. Perfect understanding? This was simple. Nothing new we did over here. Remember, I'm hoping everybody has written the rule. Whenever you purchase a new asset, you always think about two things. 180 days criteria and additional depreciation. Let's close block 1. Let's go to block 2. Block 2, what's your category, guys? Which kind of assets are we talking about in block 2? We have one more asset, no, for which they have given us opening WDV. Let's finish off these two. So block 2, let's say plant and machinery. Now within plant and machinery, we have so many depreciation rates. We have 15%, we have 30%, we have 40%. And remember, we have 45% also. We had discussed. So 4 rates we have. But here this plant and machinery is 15% plant and machinery, opening WDV 6 lakhs. So what's a category of asset? Plant and machinery. What's a depreciation rate? 15%. So all the assets which belong to plant and machinery category and also 15% depreciation rate, I'll put them under this block. Okay. So under this, as usual, we will start with opening WDV on 1st April 2022, which is right here, 6 lakhs. Then to this, we will add actual cost of assets acquired. Now, this is where the whole trick is in the question. Add actual cost of assets acquired. Let us see what are the assets acquired. Look at this. All of these plant and machineries that we have acquired during the year. Tell me, air pollution control equipment, will it go into this block? It is plant and machinery category, but is it 15% plant and machinery category? No. Air pollution control equipment, what did we learn? Air pollution control equipment, water pollution control equipment, solid waste recycling equipment, energy saving devices, life saving devices, all of these we put in under which category? 40%, right? So air pollution control equipment will go into the 40% block. It cannot come into block 2, 15% block. So I'm not considering this. This is going to be pending. We'll handle this at the end. Then what are your other new purchases? We bought machinery A. Will machinery A come into this block? Yes, it is plant and machinery category. General plant and machinery category is 15%, so therefore machinery A will come into this block. So add actual cost of assets acquired, we have machinery A. Now listen, it was acquired on 5th May 2022, which is this year, 22-23. We put it to use on 1st September 2022, indicates we have put it to use in the same year in which we acquired. So because we put it to use in the same year in which we acquired, we will check was it put to use for at least 180 days. 1st September 2022, definitely we have put it to use for at least 180 days. So therefore we will get full year's depreciation, 2 lakhs. So machinery A, 2 lakhs. We will think about two things. Number one, was it put to use for at least 180 days? Yes, it was put to use in the year of acquisition itself. Therefore, we will think about 180 days and it was put to use for at least 180 days. Will I get additional depreciation? Yes, 20% additional depreciation I can avail, right? Because assessee is a manufacturer and it is WDV method and it is plant and machinery and it is usual machinery. It is not ineligible plant and machinery. So therefore, I will get additional depreciation. Then we have machinery B. Machinery B, it was acquired on 7th June 2022. In the same year, it was put into use. So because it was put to use in the same year of acquisition, I will think about 180 days. So did I put it to use for at least 180 days? Yes, I did put it to use for at least 180 days. So 5 lakh rupees, I will get full year's depreciation. So 5 lakhs, I did put it to use for at least 180 days. Will I get additional depreciation 20%? Yes, assessee is a manufacturer. He is following WDV method. It is plant and machinery. It is not ineligible plant and machinery. All my conditions fulfilled. At least 180 days. Full 20% additional depreciation we will get. Then comes machinery C. It was acquired on 30th August 2022. In the same year, I have put it to use. So because I put it to use in the year of acquisition itself, I will think about 180 days. 1st September 2022 means did I put it to use for at least 180 days? Yes, of course. 10 lakh rupees. So machinery C, 10 lakh rupees. Yes, I put it to use in the year of acquisition for at least 180 days. And yes, I will avail additional depreciation of 20% here as well. Then comes machinery D. I purchased it on 1st September 2022. I put it to use in the same year on 31st October 2022 itself. Because I put it to use in the year of acquisition itself, I will think about 180 days. Did I put it to use for at least 180 days? I put it to use on 31st October 2022. This will be less than 180 days. So because less than 180 days, I will get only half the year's depreciation, 4 lakhs. So machinery D, 4 lakhs. In the year of acquisition, I have put it to use for less than 180 days. Will I get additional depreciation? Yes, I will get additional depreciation as I is a manufacturer, WDV basis. Then it is plant and machinery. It is not ineligible plant and machinery. I will get additional depreciation, but how much? Less than 180 days, guys. So only half I will get. What about the balance half? Don't worry, balance half you will get in the next year. You know that. Then we have machinery E. Machinery E acquired on 1st January 2023, put to use on 28th February 2023, definitely put to use in the same year. So because put to use in the same year, I will think about 180 days. It is put to use on 28th February 2023, which is again less than 180 days. So therefore, I will get only half year's depreciation. 3 lakhs. So machinery E, 3 lakhs. In the year of acquisition itself, I have put it to use, but for less than 180 days, therefore I'll get half year's depreciation. I will get additional depreciation also, but only 10% because less than 180 days, but don't worry, balance 10% next year. Then we have machinery F, second-hand machinery. It was acquired on 11th Jan 2023. Same year itself it was put to use. In the year of acquisition, it was put to use for less than 180 days. Therefore, here again you will get half year's depreciation, 2 lakhs. So machinery F, which is a second-hand machinery, we purchased it for 2 lakhs. It is put to use for less than 180 days in the year of acquisition. Will I get additional depreciation? It is second hand. Whether Indian second hand, whether imported second hand, doesn't matter. Second hand is second hand, and for second hand, there is no additional depreciation. Able to apply all these concepts clear till here? Yes, then we have motor car. Motor car acquired on 1st February 2023, put to use in the same year, in fact on the same date, 1st February 2023. In the year of acquisition, it is put to use for less than 180 days. Only 1st February 2023 will be definitely less than 180 days. But tell me, what will be the depreciation rate for this motor car? Should I put this car into the same block, plant and machinery 15%? Is it plant and machinery category? Yes, even car is plant and machinery category, but is it 15% depreciation? For car, you get 30% depreciation, right? If it was acquired and put to use in the period 23rd August 2019 to 31st March 2020. If it was acquired and put to use in this period, you would have given me 30% depreciation. CSSE is not in the business of giving them on hire. So I'm not even talking about that. I'm talking about normal, usual car, not in the business of giving on hire. So had it been acquired and put to use in this period of 23rd August 2019 to 31st March 2020, in such cases, I would have given 30% depreciation. But here it was acquired and put to use not in this period. So therefore, I will give only 15% depreciation. So yes, it is plant and machinery. Yes, it is 15%. So I will put it under this block, which is plant and machinery 15%. Block 2, here itself I'll put it. It is used for less than 180 days, 5 lakhs guys. So because it is put to use for less than 180 days, I will give only half the year's depreciation. Will I get additional depreciation? Will I get additional depreciation? No additional depreciation because this is a road transport vehicle. Understanding? Okay, then next, what else? We have air conditioner installed in office. Will this come into this block? Is it plant and machinery? It is not building, guys. It's not furniture. It is not intangible. Everything else plant and machinery. So yes, plant and machinery. Is it 15% plant and machinery? Yes, general plant and machinery 15% installed in office. So air conditioner installed in office. We acquired it on 1st February 2023. Same year we put it to use on 2nd February 2023. Definitely less than 180 days. So I will get only half year's depreciation, 1 lakh. So I put it to use for less than 180 days. Will I get additional depreciation? No additional depreciation guys because it is being installed in office. Remember we had learned one of the points that if it is installed in office, guest house, residential house, no additional depreciation. You will get additional depreciation only if it is used in the factory where the manufacturing is happening. So here because it is used in the office, no additional depreciation. So this is it about the assets purchased. We are only left with air pollution control equipment which we'll have to take up separately. After this, what will we subtract? Money is payable for assets sold. Have we sold any asset during the year? No. So add up. What's a closing WDV on 31st March 2023? Be careful. Give me the correct number. How much do you get? 38 lakhs. Now on this we will calculate depreciation, but do I have to do any splitting or can I straight away calculate? There is less than 180 days, so I will have to split, right guys? Because less than 180 days you will get only half the year's depreciation. So we will split it into two parts, less than 180 days and balance. And you know very well, we always fill in less than 180 days part first, only then we fill in the balance part. So what are the less than 180 days numbers? All of these are less than 180 days numbers, guys, which is going to be 4 lakh plus 3 lakh plus 2 lakh plus 5 lakh plus 1 lakh. So 15 lakhs of less than 180 days and everything else balance, which is the balance 23 lakhs. Rohan, you're getting 32 lakhs because you did not consider the 6 lakhs. You did not consider this opening WDV number, that's why. You can't afford to make these kind of silly mistakes. Make a conceptual mistake in the examination, you will be able to forgive yourself. You do these silly mistakes, you will just not be able to forgive yourself. And I keep telling you all, suddenly in the examination, if you decide I will be accurate today, that accuracy will not suddenly appear magically. During the course of your preparation, you got to train yourself to avoid mistakes like these. Do not excuse yourself. Do not excuse yourself whenever you make a silly mistake like this. All right, try to avoid these kind of errors. All right, now so we have split this 38 lakhs number into less than 180 days and balance. Now what to do? First we'll calculate normal depreciation, guys. So less normal depreciation. Please show the calculation. 15 lakhs into the depreciation rate. Tell me, should I write 7.5% because less than 180 days because half year's depreciation? So should I write 7.5%? No. I've told you, I hope you remember. If it's less than 180 days, depreciation rate will remain 15%. Only thing I will calculate for half year. So don't write 7.5% because if you write 7.5%, you are saying the depreciation rate is 7.5%. No, depreciation rate is 15%, just that you're going to get half year's depreciation. And for 23 lakhs, how will you calculate? Full 15%. So do your math. How much do you get? You'll get 1,12,500 for less than 180 days. And you'll get 3,45,000 for balance. So what is the total normal depreciation? You will get 4,57,500 total normal depreciation. Okay, then after this, we'll have additional depreciation also in this question, guys. So in addition to normal depreciation, you will also get additional depreciation. Here you have to be a little careful. See, listen to me. I'll give you time to write, just listen to me. You're getting additional depreciation for 5 assets. Out of these 5 assets, for these 3 assets, you're going to get full 20%. And for these 2 assets, you're going to get only 10%, only half, because less than 180 days. So be a little careful. Under this write down, less additional depreciation. Under this write down, do all the writing and all the calculation in your particular part itself. Straight away total additional depreciation we will write in the amounts column. So under this write down, at least 180 days. How much do you have for at least 180 days? How much asset? 2, 5, 10, 17 lakhs. So 17 lakhs into 20%, that's going to be 3,40,000. And less than 180 days, how much do you have? Less than 180 days for additional depreciation. For 10% additional depreciation, you have only 7 lakhs. So 7 lakhs into 10%, which is going to be 70,000. So what's your total additional depreciation? 4 lakh 10,000. So give your final opening WDV number. Opening WDV on 1st April 2023. Be careful. Your closing WDV number is 38 lakhs. 38 lakhs minus these two depreciation numbers. You will get 29 lakhs 32,500. Right. Done, everybody? Got it? So additional depreciation, only on the new assets you had additional depreciation. Some of them full 20%, some of them 10%, but don't worry, balance 10% you will get in the next year. All right, now we are left with only one last block. We are having block 3. Remember we had that leftover air pollution control equipment. New asset, guys. This is going to be simple. Let's finish this. Block 3. Tell me air pollution control equipment, which category? Plant and machinery category. Within plant and machinery category, what depreciation rate? 40% depreciation rate. So write down opening WDV 1st April 2022 0. We don't have any opening WDV. They had given us opening WDV only for 15% block and building block. So 40% plant and machinery, no opening WDV. Straight away we will add actual cost of assets acquired. Yes, we did acquire an air pollution control equipment 4th May 2022. Same year we put it to use. We put it to use for at least 180 days. Therefore, we will get full year's depreciation on this 4 lakhs. So 4 lakhs, we always think about two things. Yes, we put it to use for at least 180 days. Will I get additional depreciation, by the way? As he is a manufacturer, why no? Why no? Think, listen, as he is a manufacturer, he is following WDV method of accounting. It is plant and machinery. It is not ineligible. It is not ship. It is not aircraft. It is not road transport vehicle. It is not second hand. It is not already fully debited. Why? Why no? You will get additional depreciation. Full 20% you will get. Okay. Less monies payable for assets sold. Have we sold any assets during the year? Not at all. So this 4 lakhs as it is will become our closing WDV on 31st March 2023. Do I need to split and all? No, no less than 180 days. Straight away we can calculate less first normal depreciation, guys. 4 lakhs into 40%. 1,60,000 normal depreciation. Then you will have additional depreciation also because all your conditions are fulfilled. 4 lakhs is your purchase cost, your actual cost. 4 lakhs into 20%, right? Full 20% because at least 180 days, 80,000. So what's your net number now? 4 lakh minus 1 lakh 60 minus 80. You'll get balance 1 lakh 60,000. This is going to be your opening WDV for the next year. Got it? So this was your question on additional depreciation. So they've asked us for total depreciation. So we have to give a summary as well. So under summary, make a 3-columnar table. Block, normal depreciation, additional depreciation, make a 3-columnar table. So block 1, your building block, guys, you only have normal depreciation of 6 lakhs. You don't have any additional depreciation. Block 2, your plant and machinery 15% block. Your normal depreciation was 4,57,500. Your additional depreciation was 4,10,000. Your block 3, you had normal depreciation of 1,60,000, additional depreciation of 80,000. So give me your final numbers, your total depreciation numbers. Total normal depreciation is 6 lakhs plus 457,500 plus 1,60,000, 12,17,500 here and 4,90,000 here. So therefore, total depreciation is equal to 17,07,500. See, once you calculate depreciation, whether it is normal depreciation, whether it is additional depreciation, no difference. Once you calculate depreciation, whether normal, whether additional, it's depreciation. That's it. So total depreciation 17,07,500. Understood? Yes, this one question itself handles it all for you relating to additional depreciation. We'll be doing many more questions relating to additional depreciation adjustment. When we come to the full-fledged questions, we'll come to some more additional depreciation adjustments. We'll see them there. But for now, I think you should be confident with this. All right. So we'll close this discussion on additional depreciation here. Right? I'll close this discussion here and then we'll take up the next set of adjustments under depreciation.